Alright, gang, it's your boy Nature, aka Nature. Alright, so we're back with the next lesson. How to use moving average crossover to enter a trade. Alright, so gang, let's just start this video. Alright, so gang. Alright, so how to use a moving average crossover to enter a trade. Alright, so we already know how to identify the moving average, to identify the trend using moving average. So let's look on how to use moving average crossovers to enter a trade. Alright, so far you have learned how to determine the trend by plotting some moving averages on your chart. You should also know that the moving average can help you determine the trend and when it's about to end in reverse. Okay, as a trend trader, you want to recognize and ride the trend for as long as possible. Meaning you want, as a trend trader, meaning that a trend trader is someone that rides the overall trend. If it's in an uptrend, we only trade uptrends, okay? We don't trade the downtrends, the pullbacks, okay? Because the overall direction of the trend is an uptrend. So we're a trend trader. If it's an uptrend, we're only looking for buys. If it's a downtrend, we're only looking for sales, okay? So that's what a trend trader is. So as a trend trader, you want to recognize and ride the trend for as long as possible. You have to know when to get in and when to get out, okay? A trend can be defined as a simple as the general direction of price over the short or medium or long term period, okay? So some trends are short-lived, while some trends last for days, weeks, or even months. But you don't necessarily know how long a specific trend will last. A technical tool known as a moving average crossover can help you identify when to get in and when to get out. A moving average crossover occurs when two different moving averages line cross over one another. Because moving averages are lagging indicators, the crossover technique may not capture exact tops and bottoms, but can help you identify the bulk of the trend. A moving average crossover simply helps you to answer these three questions. Which direction might the trend be trending in, if at all? Where might be a potential entry point for a trend trade, and when might be a trend ending, or when a trend might be reversing? Okay, so it lets you know when to get in a trend, when to get out of a trend, when it's a possible the overall direction of a trend, and when it's a possible potential entry point for a trend trade. Okay, the moving average crossover and does all this. So all you have to do is just plop on a couple of moving averages on your chart and wait for a crossover. So if the moving average cross over one another, it could signal that one trend is about to change soon. So when moving average cross over, it signals a trend reversal, okay, or a trend is about to change soon, thereby giving you a chance to get into a better entry. By having a better entry, you can have a chance to bag more pips. If Allen Iverson made a living by having a killer crossover move, why can't you? So let's take another look at a daily chart on the USD JPY to help explain the moving average crossover. So, alright, so let's explain the moving average crossover on a daily chart on USD JPY. So this is USD JPY on a daily chart, on the day chart. All right, as you already know in the previous lesson, if the candles are above the um, the 10 M the 10 SMA, the 10 SMA is the blue line, and the 20 MS SMA is the red line. As you can see, the current trend was an uptrend. As if price or the candles are above the line, the moving average line, no matter if it's a 10 SMA or a 20 SMA, as long as you see the candles above it, this signals that that the trend is in an uptrend. As soon as you see the candles right here, as you're starting to see the candles, they're below the moving average. This lets you know that it's a downtrend. So how can you know? Okay, well, it's going to have a moving average crossover. As you can see, notice at the highlighted circle, you can see a moving average crossover as the blue candle crosses over the red candle. As soon as you see the blue and the red candle cross over, it immediately followed a downtrend. So once you spot moving average crossover by putting a 10 SMA, a short period SMA over a longer period SMA or EMA, you can find the crossover of the current trend. Once you find a moving average crossover, then you can determine the trend, the overall trend. And once we see the moving average crossover, the candle start to cross over, and started going down. Okay, so now we're in a downtrend. Notice after the crossover, the pair began in a nice downtrend. So on top of the moving average crossover, we already know how to read candlesticks pattern. This is on top of a resistance. Okay, this is a high resistance level, and on top of this, this right here is a three. This is a three inside down pattern. Okay, this is a three inside down pattern. Once we see the three inside down pattern, I will show you right here. This is a triple candlestick pattern. Three inside down. Let's see the images of a three inside down pattern. Okay, so three inside down pattern is it's at the top of an uptrend. All right, and it must be right here is the example. It must be one green candlestick followed by an indecision in the market, followed by a red candlestick closing, or a white. One must be one white candlestick or green candlestick followed by a black or red candlestick, and making indecision in the market, and then a longer black candlestick or red candlestick closing below the white and black candlestick, the three inside down right here. So this is that same exact pattern. We also can see what type of chart patterns occur once price made a crossover or a moving average crossover with chart patterns or Japanese candle patterns that it make for that to be valid also. So as you can see in this picture, this is a clear inside down pattern, a moving average crossover pattern. As you see the green candlestick followed by a black candlestick or a red candlestick followed by a longer red or black candlestick closing above the white candlestick in the previous red or black candlestick, or green candlestick. So this is a three inside down. Once you get this triple candlestick pattern, sometimes price takes about 3 or 4 candlestick patterns to be valid for price to actually, or something for price action to be valid in a new direction. We have to wait for a triple or fourth or fifth candlesticks to form before we can actually say that it's a downtrend, that downtrend is valid. But we also see a triple inside down. Once we got this triple inside down pattern, it let us know that price is now in a downtrend, as a triple inside down pattern right here, as I just showed y'all in the picture, signifies, is one of our patterns that we went over already. It signifies that a downtrend is now in effect. Alright, so after this triple inside down pattern or this moving average crossover, price did continue in a downtrend, as all the candles are now below the red and blue line, signifying that price is now in a downtrend. Notice how after the crossover, the pair began a nice downtrend. So, alright, this is very, very important. Alright, make sure you look at what is going on as far as the candlestick formations and patterns that they're making at their top of resistance and support levels. Alright, so that was a really important game. From around April to July, the pair was in a nice uptrend. It topped out at around 124 before slowly heading down in the middle of July, as we can see as the 10 SMA crossed over the 20 SMA. What happens after that? It's a nice downtrend, okay? If you had shortened at the crossover, or once you've seen that triple inside down pattern or that crossover moving average pattern, you would have made yourself almost 1,000 pips. Of course, not every trade will be thousands of pips winners or hundreds of pip winners or even 10 pip winners. It could be a loser, which means that you just get in the opposite direction. If you're losing that trade, you get back in the opposite direction and you trade and you get your money back plus more. All right? There's no losing around here. It could be a loser, though, which means you could have to consider things like where to place your stop loss and when to take profit. You just can't jump in without a plan. So I hope this helped. What some traders do is that they just close out their position once a new crossover has been made, or once the price have moved against the position or predetermined amount of pips. Okay, so this is what Hawk does in LHB system. She either exits when a new crossover has been made, but also has a 150 pip stop loss just in case. The reason for this is just to don't know when the next crossover will be. You may end up hurting yourself if you wait too long. Okay, so that's why we lose all technical indicators. That's why we looked at the Japanese candlestick chart pattern. That was a triple inside down pattern, because you just can't make your decisions off of technical indicators, off of moving average crossovers and move averages, okay, and Fibonacci's. You have to look at everything, okay, and what the market is in the direction of the trend. Okay, so one thing to take note of with this crossover system is that while it works beautifully and is in a volatile in a trending environment, they don't work so well when price is ranging, okay, or consolidating. You will get hit with tons of crossover signals, and you could find yourself getting stopped out multiple times before you catch a trend again. In summary, moving average crossovers are helpful in identifying when a trend might be emerging or when a trend might be ending. The crossover system offers specific triggers for potential entries and exit points. These triggers should be confirmed with chart patterns or support or resistance breakouts, okay, which you will learn about later in the school, okay? So you will learn about later in the school. All right, so we use the crossover for potential entries and exit points, okay? So for like this moving crossover right here, once you see a moving average crossover or 3 inside down on top of resistance, on top of the moving average crossovers, this is a clear signal that you will get an entry right here, and you get an entry at the top of the resistance because you sell at the top, okay? As you get in for sales, because we're getting in for sales at the top, you will have almost caught 1,000 pips, okay? So depending on your lot size, that could be like $3,000 or $4,000, $5,000. It could be $1,000, okay, a couple hundreds, depending on your lot size, okay, which we do go over. I do tell you guys how to trade lot sizes, and you'll see more and more of that after we get done these videos. So, all right, gang, this is how to basically the crossover system of a moving average crossover, and I just showed you guys once you see a moving average crossover, you get in for a potential entry, and then you ride that for as long as you can to see another moving average crossover or some type of candlestick formation, whether it be a bullish candlestick formation at the bottom of the support level or something like that. You get in, you get out for an exit point, and you get in for a new potential entry. Okay, once you see that moving average crossover again. So these triggers should be confirmed with chart patterns and support and resistance levels, which we will go over in our next video. So you will learn about that later in school. So use this. All right. So our next lesson will teach you how to use moving average on a dynamic and support resistance level, which I was kind of already teaching y'all how that moving average, that crossover was at a resistance level. Okay, we only trade at resistance and support levels, as y'all already know that. I already teach y'all that. So, all right, gang, our next lesson, how to use moving average on a dynamic and support resistance level. All right, it's your boy Nature, aka Nature, gang.